Hey, welcome back. Following the crackdown of the Chinese government from a few years ago, Alibaba's stock is now close to some of the lowest levels in history. However, with a pretty big discrepancy between the company and the stock, as well as a lot of potential coming from many factors, as you are about to see, Alibaba might be a good stock to buy today. A majority of the money they make is from the local e-commerce, but they also make money from cloud and several growth engines. Combined, the rest of the business, meaning logistics, international e-commerce and the others, provide around half of the revenues. However, when you think about it, this half has the potential to be scaled a lot more thanks to international expansion. If they grow in international e-commerce, then the logistics, the services and so on can also grow together. They can produce a free cash flow of something around 20 to 25 billion today, so they are currently traded at a ratio of around 8. But we saw them make even 35 billion in a very good year, so they have potential, especially if they expand. We can see that the capex is kind of low recently, which might be a bit concerning, but I think it's something you have to look at over more than just 1 year. Now, to get to the financials, they have current assets of around 114 billion, which are more than enough to cover the company's total liabilities. So they are in excellent financial shape, and if this was an American company, it would have probably been like 3 or 4 times more expensive. Something very impressive is the 44% growth in the international business. With a new logistics center in Turkey and a couple more opened in the US last year, this can unlock a lot of value in the future. I mean, Pinduoduo was able to get quite a lot of traffic in these areas with Temu, so there is potential to grow in these regions even with giants like Amazon or eBay already well established in the market. Still, competition remains a problem, but even if they solidify a relatively small market share in these regions, there is still potential to grow. A company like Amazon, for example, has many times more capital available than Alibaba is worth, so they can be quite an issue. So overall a decent quarter, but what the market really liked about it is the 25 billion boost to the buybacks. Until the end of 2027, they now have around 35.3 billion available for buybacks. That's a roughly 18% buyback yield in 3 years or 6% per year. However, I talked about the effect of buybacks in the Google stock analysis, and even though there isn't a clear number, buybacks are a bit different than dividends. Because this is a matter of supply and demand, buying 18% of the company could increase the price by much more than 18%. If they add 2 times the value to the market cap, that's a stock price of around 106. But there are theories saying that buybacks could add even 5 times their value, which would be a stock price of almost 150. So the buybacks alone could make this even a potential 2x, but each company is ultimately unique. And this is the thing with profitable companies. When they make 15, 20, 25 billion per year in cash flows and the market is trading them at 200 billion, they can easily buy back a ton of shares and even pay massive dividends. And this is especially good given the financial shape. With such a good balance sheet, they can easily focus on investing or dividends, and you know that the debt won't be an issue. They are very similar from this point of view to companies like Apple or Alphabet, but again traded at relatively less than half of their value. But don't forget what started the whole crash in the Chinese market. Politics can always ruin this company, and the whole VIE structure and the fact that you don't directly own a share of it makes the risk even higher. On the other hand, it can also be a massive catalyst that would make this market go up quite a bit. China's politics and fines and all that stuff began the crash in the market, and the potential reversal and pro-market attitude could have the opposite effect. China is, at least according to them, trying to open their economy, but on the other hand you have the potential for more sanctions and overall a lot of uncertainty, and the market doesn't like that. Talking about buybacks being a thing of supply and demand, something that has affected the stock a lot is SoftBank selling its stake in Alibaba. We talked about what 35 billion of demand over 3 years could do, but they sold more than that in the past year and a few months. So even just the selling pressure stopping could be a big opportunity for the investment. This is definitely not something to ignore, especially when you take into account the big buyback program. There is the on and off discussion with Alibaba splitting into several companies, which could unlock a bit of value, but until we see some concrete actions, this is just some potential to keep in mind. By the way, the co-founders also bought back around 200 million worth of shares in recent months, so maybe all these things combined could be the beginning of a recovery. They also began paying a small dividend recently, but I don't see this as a dividend stock yet. Maybe if they double it in time, meaning about 5 billion per year for a yield of around 2.5 to 3%, then it's a bit more significant, but until then it's really not that meaningful. The buybacks on the other hand, and both together, however, reach a pretty significant amount. As for a valuation, let's begin with a cash flow of 20 billion to be a bit more conservative. In a bad scenario, let's say it goes to 15 billion in the next half a decade. This could be possible with sanctions or some kind of issues with the competition. If the market is trading it at only 10 times that amount, that's a market cap of 150 billion. That would be a stock price of around 59 for a 10-20% loss, so not too much, but obviously this is not the worst case possible. This is actually pretty similar to the lowest price we've seen Alibaba traded at. In a neutral scenario, let's say they remain around 20 billion, but there is less selling pressure, leading to a ratio of 15 plus the effect of buybacks. So that's a market cap of 300 billion for a stock price of 120 and a 60-70% profit. Assuming that the buybacks had 2 times their value, that's 370 billion, meaning a price of 148 for a roughly 2x in about 3 years. Now, in a good scenario, let's say the average cash flow reaches around 25 billion and the market is trading it at 20 times that amount, which is below the average from before the crackdown. That's a 500 billion market cap and a price of 200, so a 180% profit plus the buybacks. If they had 3 times their value, not going with a 5x as some believe, that's a market cap of 605 billion, so a price of 242 for a roughly 240% profit. Again, I'm not going with the worst nor the best cases, and even in a conservative approach, the current price is very attractive for me. Think about them making 35 billion again and being traded at a ratio of 25. With the buybacks, they can even get to 1 trillion, so more than a 5x from the current price. So there is a lot of potential, but I'm always going to be a bit more conservative to get a better margin of safety. If I didn't have enough already, this would have for sure been a good price to buy right now in my opinion. Overall, Alibaba is a very good company and is definitely undervalued. They have excellent financials, they are very profitable and still have a lot of potential to grow. The buybacks and the end of SoftBank selling their stake could potentially be a very nice catalyst, especially if backed by good reports. Again, I have enough and probably won't buy unless it crashes a bit more, but this is an objectively good price in my opinion. I think Alibaba is a very cheap way to get exposure not only to a very good company, but also to China's potential recovery. And again, if there is a potential reversal in their policies, Alibaba would benefit a lot. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out and make sure to subscribe. Thank you for watching and I'll see you next time.